You mentioned FTX, and I actually want to make a comparison here, and I'd love to kind of get your reaction to it. So we know that cryptocurrency companies, and let's use FTX specifically as the example, and banks have a lot of differences, right? There is FDIC insurance for, let's say, a Silicon Valley bank. There is no FDIC insurance for FTX. We know that what appears to have happened at FTX is that they said they were doing one thing with the deposits and they did something else. And so obviously there's been huge fallout. Sam Bankman-Fried has been arrested, and there are many allegations of fraud and various other nefarious or malicious types of activities there. But at the end of the day, FTX took in customer deposits. They took those deposits, regardless of what they said they were doing with them, and they bought assets. Those assets did not go up in value or make money. They instead went down. There was unrealized and then eventually realized losses when the bank run happened. And so kind of a bank run exposed bad investments with customer deposits, right? In the most basic form of FTX. If you now go and you look at a Silicon Valley bank, it kind of sort of looks like it's the same thing. Now, again, there's FDIC insurance. The government has stepped in to backstop the deposits. The bank appears to have said what they were going to do with the deposits is what they did, but they took in customer deposits. They bought assets. They were bad bets. They were unrealized losses. And then a bank run caused those unrealized losses to become realized losses and kind of expose this. Is that a fair way to kind of look at the similarities and differences between an FTX and a Silicon Valley bank?
There's a key, the mechanism is the same, but there's a key difference. FTX is a brokerage. They're supposed to keep customer deposits separate, and they don't have a right to use yours. A bank is in the business of using your deposit to make bets. And back in 2020, the Treasury changed the rules and said you don't need mark-to-market accounting because the bond market had become illiquid. And that was okay, but it compounds this issue once depositors leave. So yes, there is a comparison that you took customer money and you made a bet. One is actually allowed, the other one's not allowed. There's also a lot of regulation about what kind of bets you can take. You know, we stopped the ability to have prop trading in banks. That went by the wayside a while ago. But FTX was essentially prop trading with customer money, which they shouldn't have done, which was kind of more what MF Global did when John Corzine essentially took brokerage deposits and bet it on the European bond market and blew up. And he shouldn't have done that. He was allowed to do it at Goldman, but it's a different business. Brokerage, you don't get the rights to use the customer funds. In a bank, people don't realize is you are the product. And that's very different.